Today the market is collapsing, making a very powerful bearish signal which suggests a possible reversal ahead. Now, as the focus of this channel is entirely practical, let's try to answer a few questions such as what to do with this reaction, or what can we expect from the market next? Well, this is the Finance Hydra channel where every single day you receive analysis without bias, and I share with you a professional reading based on facts, technical evidence, and probabilities. No panic, emotions, or stress. Let's leave the emotions to the amateurs who like to bet on the market. Here, we never bet, and everything we do is based on strategy. My name is Nathan. Welcome to my channel. Welcome to another daily analysis video. Now, as far as I'm concerned, SPY is collapsing over here, losing many important short and medium-term support levels like the 610, the 609, the 608, the 21-day EMA, the exponential moving average on the daily chart. Now, SPY is clearly in bearish territory again. What's the last major support level for the SPY? Is the $600, a psychological key point and a round number, which, as you guys know, the market has a thing for round number, and of course it is also a technical support level, as we can see over here on the 1-hour chart. This key point near the $600 was a previous top level over here, top level over here, top level over here, support level over here, top level over here, support level here, support here, and right now, guess what? We are stabilizing our price here again. We did mention this support level yesterday, and we have been talking about the $600 for a few weeks now, and we did correctly identify this key point as our major inflection point for the SPY. Now, seeing its price stabilizing right above this support line is not surprising at all. It is expected, but you may ask, okay, Nathan, but what if we lose this support level? Then we are going to technically lose our most important inflection point, medium-term wise, suggesting a sharper correction to our next support level, which is $10 below the $590 down here, okay? That's our next technical support level. What's more, by losing this key point, we are going to also make a sign of a top on the weekly chart, a top signal on the weekly chart, and this bearish reaction has a name so far. It is a bearish engulfing candle pattern, which is a quite reliable, from a statistical point of view, it is a quite reliable bearish reversal candle pattern, reversing the trend 59% of the time, according to Thomas Bulkowski's studies. Therefore, it is a quite reliable candle pattern, bearish reversal candle pattern, but in order to trigger it, the SPY needs to lose the $600 on the daily chart, alright? Only then we may see a sharper correction on the weekly chart, maybe to retest this purple trend line over here, which is here since October 2023, right? And of course, the 21 weekly moving average as well. So we have a double support level on the weekly chart that could hold SPY's price. What's the problem? The problem is that right now we do not see any meaningful bullish reaction so far. I know we are trying to stabilize the price above the $600 line over here, but this reaction alone is not a fantastic, amazing, incredible bottom signal yet. We gotta see more bullish confirmation, preferably on the daily chart, if we do see SPY. Now, on the other hand, okay, Nathan, we have a possible bearish thesis over here if we see the SPY losing the $600. I do understand that, but what it takes for the SPY to reject this bearish case, because we could reject the bearish case, right? And you are totally right, because we are still kind of maintaining the uptrend. We are still making higher highs, higher lows. Recently, we made a new record high, right? We do this, right? We are doing this, higher highs, higher lows. Recently, we made a new record high. Now, we are trying to make a new low. all right? As long as this low is not below the $600, the previous support level over here, okay, we are going to maintain the bullish bias. I know today's drop's quite scary, right? 1.60, it is down more than 1.5%, okay? So it is quite scary. But if we see any clear bottom signal on the daily chart, all right, not only on the 1 hour chart but on the daily chart as well, if we see a clear bullish reaction next week above the $600 support line, well, that could be a bottom signal on the SPY, suggesting that it could maintain the previous uptrend. We are not gonna trigger a meaningful bearish reversal chart structure yet. I know we are below the 21-day EMA. We are making a very ugly bearish candle pattern today. Yes, we are, but there is still a chance that SPY could reject this bearish thesis over here. It all depends on how it is going to react right now near the $600 next week. If we lose this key point, all right, $590. That's going to be our next technical stop, which is also very close to this double support level on the weekly chart, making this key point around 590s the most dangerous inflection point for the long-term trend, a multiple support level seen in 2 different time frames, all right? Therefore, that's the plan. That's the plan for now, okay? It all depends on how SPY is going to behave above the $600. And now, I know, I told you guys we see a bearish engulfing candle pattern over here on the weekly chart, and we saw a pattern like this before a few times in the past, like here, okay, in July last year, and like here as well in April last year. So this candle pattern is indeed quite problematic, okay? So if you ask me, Nathan, what do you believe it's going to happen? And I hate to answer these questions because, well, it is what I believe, all right? And simply nobody cares about my personal opinions, all right? Because here in this channel, we always focus on technical evidence, okay? Facts, probabilities. But since we have many bearish signals on the daily and weekly charts, I would say that we have a slightly better chance of making a sharper correction over here, okay? Slightly, not much. Do not bet on that, okay? Not investment advice, but that's what I see for now. And remember, my dear friends, trading is reactive, it is not predictive. So if we see a bottom signal over here next week, well, that could be a buy signal, regardless of what I think or of what I believe, all right? Because no one cares about personal opinions over here in this channel. You'll never see me saying that, oh, it is going to go up because I believe it will. No. Every single opinion, every single analysis I made here in this channel are all technically based, all right? Now, the QQQ shares a very similar reading because we are losing the 21-day EMA, but we still could react from here, okay? We are not that down, all right? I know we are dropping more than 2%, but we are not that below the moving average yet. And honestly, this reaction could be an overreaction, all right? So if we see next week another bullish candle above the 21-day EMA, that could be just another bottom signal. And what we see here on the QQQ could be just another harmless pullback in an uptrend, because QQQ is still slightly bullish. I'm so sorry, it is still clearly bullish, all right? Making higher highs, higher lows. So this could be just another low 2 or 21-day EMA. That would be very interesting. But a few stocks deserve to correct more, all right? Like, for instance, Nvidia. Nvidia right now is retesting the 21-day EMA. Okay, great. But if we lose this moving average next week, we could easily retest our next major support level around 130s. And that could be a very, very good buying opportunity. Of course, not investment advice, all right? But from a technical point of view, we could see a very good buying opportunity near a support level after a pullback on the indices, after a pullback, after closing this gap over here, right? So we just closed this gap. Right now, we are dropping. Okay. it feels like a pullback just to the 21-day EMA is not enough, alright? We deserve to see better pullback. Of course, I'm not going to complain if we see a bullish reaction above the 21-day EMA next week. In fact, that could be undeniably another buy signal on Nvidia, but I would like to see, I prefer to see Nvidia correcting a little bit more, because this support level is more emblematic for Nvidia, right? It is more symbolic, it is more important. It is the 130s. It was the previous top and support level multiple times in the past, all right? Another classic example of how the principle of polarity in technical analysis works, all right? Previous top levels acting as support levels and vice versa. So it feels like it is a stronger, more important support level. Maybe we're gonna get there. Maybe Nvidia will collapse after earnings. We don't know, but all that I know is that right now Nvidia is reaching its 21-day EMA. We have yet to actually hit the 21-day EMA, but we are very, very close to it. Maybe next week we're gonna see Nvidia making something good, something interesting near this moving average, or in the worst case scenario, we are gonna keep dropping to lower support levels. All right, that's my humble, honest opinion here on Nvidia. And guys, Tesla is also dropping today. It is following the indices. We don't see any meaningful bullish reaction yet, but last week we saw a very nice bottom signal over here, and I did give you guys a call on our 5% project group, all right? So right now we are down again, okay? We are losing momentum again. We are slightly below our original entry price. It feels like Tesla needs, in order for it to actually materialize another meaningful bullish signal, is to break the $358 area over here, which is very close to the 21-day EMA, and it is also quite close to the 373, the previous support level over here, which could be our next resistance level in the future. All right, so we gotta see Tesla breaking this resistance area as soon as possible in order to materialize another meaningful, good, bullish movement. Now, if you ask me, Nathan, how concerned are you with this reaction? Because you told us you are long in Tesla over here. Okay, sure, but guys, this reaction alone is still not enough to ruin our original bullish thesis, okay? Because on the weekly chart, we saw a pullback back to the 21 weekly moving average, which is acting as a support level, back to the support level here on the daily chart around 320.26 down here. So we saw a pullback to a multiple support level in two different time frames. What's more, last week we saw a Dragonfly Doji candle pattern, which is a quite nice bullish reversal candle pattern. It is not that reliable. According to Thomas Bukowski's studies, it is slightly more than 50% chances of going up, but since this pattern appeared above such important support level after a crystal clear pullback on the weekly chart, maintaining the long-term uptrend of higher highs, higher lows, okay, to me it is still a very nice buying opportunity. But Nathan, what if we see Tesla losing this support level again? All right, then it is going to be a sell. Then it is going to trigger our stop loss, and that's totally fine, because here professional traders don't try to avoid losses entirely, okay? We accept losses. We accept that losses are part of the game. We just follow a strategy that allows us to maximize our profits while mitigating our losses. That's the secret. That's how you achieve consistency. And the only thing that is going to make you anxious, stressed in this market, if you don't trade using a crystal clear strategy, all right? Because trading shouldn't be stressful. It shouldn't be something that makes you anxious, because if you have a strategy, everything will be fine. And guys, here we work with honesty and transparency, so I have to tell you that you can trade with us using my strategies and trading signals. I invite you to become a member of our educational project, the 5% project, because there our students have access to our exclusive trading signals, and I teach you how to trade in practice, in real life. All right, and it is free to try, totally free. You have 7 days to get to know our work, no strings attached. All right, absolutely free. We have a very healthy philosophy of showing our students results first, so that you can decide later whether you really want to join us or not. All right, and we do have a very nice track record. We have a very nice solid strategy, so join our community. The link to my website is in this video's description. All right, right below this video. Okay, just take a look at our website for more information and join the 5% project for signals, strategies, etc. All right, now AMD, this one as you guys like to say, like to call, advanced money destroyer, right? Clearly bearish. Right now, today, we are doing the exact same thing. NVIDIA, I'm so sorry. AMD should do, all right? We saw yesterday a bearish reaction, and right now, today, we see another bearish reaction closing below yesterday's low, making this a sign of a top signal below this double resistance level made by the 21-day EMA, made by the 114 area, the previous support level over here, now resistance level again, principle of polarity in technical analysis. So is AMD a good buy right now? Of course not. Why not? Because according to my trading philosophy, at least, there is not a single bottom signal. There is not a single technical evidence suggesting that AMD is finding a bottom in this area right here, right now. If it does, great. But right now there is no reaction. And remember, trading is reactive. It is not predictive. We can't predict the future, but we can react properly to what we see right here, right now. Now you may ask, okay, Nathan, but what it takes for AMD to turn bullish to you? We gotta break this double resistance level. All right, that's the only thing. Because if we do that, without losing the previous low over here, we are gonna trigger a bullish pivot point. A higher high, higher low, breaking a double resistance level. That would be fantastic. But there is no such bullish reaction yet. So in the absence of a clear bullish reaction, we can't help ourselves but expect more drop on AMD. In this case, our next technical support level is $100. All right, 100. I'm so sorry, I said technical. I mean psychological support level, okay? Because right now, the next technical support level actually is around $93. All right, but the $100 is a very nice number, okay? Round number, psychological support level. So I see this area as a possible support level for AMD next, okay? Right now, no bullish reaction. Regarding Palantir, we see another bearish engulfing candle pattern right above, way above the 21 weekly moving average, suggesting a possible correction ahead. What's the problem? The problem is that Palantir is still above its major inflection points on the daily chart, namely the 21-day EMA and the $100 psychological support level. All right, only by losing this double support level, we would see Palantir actually reversing the medium-term trend, suggesting a sharper correction on the weekly chart. All right, back to the 21 weekly moving average. Okay, that's the only thing that could technically reverse Palantir's uptrend right here, right now. And I'm gonna be honest with you guys, we are dangerously close to this support level, so it is better to watch out, okay? Yesterday we saw a fantastic hammer candle pattern, but today we are dropping again, so it feels like we gotta see a meaningful, very good bullish reaction as soon as possible next week to avoid a further collapse. Okay, and to resume the uptrend to higher levels to retest new all-time highs. All right, so Palantir is trading around a critical inflection point. We see Palantir reacting above its support levels on the daily chart while making a technical bearish engulfing candle pattern on the weekly chart. All right. And guys, I teach you every single one of these candles and the chart patterns on our exclusive ebook on technical analysis, which is again totally free to download on our Telegram channel. All right, it is free. Okay, we have this philosophy of education should be free. Okay, so we have a free ebook. You can join our Telegram channel for free for 7 days. Our videos are for free because learning should be free. Okay, the only thing that I actually charge you is the experience. Okay, is the 5% project, because guys, it is not easy to analyze dozens of stocks every single day to recommend you guys the best opportunities around. So that's the only thing that I charge you, but the rest is totally free. Okay, so if you want to learn more about candle chart patterns, risk management, just take a look at my ebook. It is free to download right there on our Telegram channel. So join the 5% project. And right now, I gave you guys, speaking of the 5%, I did recommend buying Apple over there, right here near this support level. Okay, today Apple hit our target, finally hit our target after a few weeks. Now, we hit this target, which was a previous resistance level from January 6, again January 31. Now it is losing momentum, making a gravestone doji below this resistance level. So okay, we hit our target, was a very nice buy signal. So right now I recommend selling Apple. Okay, that's my personal recommendation. We gotta sell it because right now it just hit our target. It was a phenomenal trade, but I'm not saying it is a good opportunity to short because we are still bullish. All right, we are still above the 21-day EMA. We are still bullish on the weekly chart, so we are not technically a good short right now. But I understand that if we see any pullback on Apple over here, any pullback to the 21-day EMA, or maybe even a very sharp correction back to the $221, could be just another buying opportunity. Okay, because that's what we do. We buy near support levels. We don't buy near resistance levels. We buy near support levels because near support levels, the risk reward ratio is optimized. All right, so right now, as far as I know, Apple could be another buy again. It is not right now, so to me, it is an opportunity to wait, to book profits, and study how Apple is going to behave next. All right, we did buy Apple over here, we sold over here, we bought over here again, and we sold over here. Now, if we see Apple dropping again, would be fantastic, just fantastic. All right, now what if Apple breaks this resistance level over here? Then all right, we're gonna seek higher levels, maybe the all-time high. That's not a problem at all. I'm not going to cry about it because we always follow our trading strategy. Okay, just like happened on Nvidia over here, because we bought Nvidia here and we sold here, right? It did went up, it did go up a little bit more, but right now we are dropping again. So as far as I know, it could be just another buying opportunity if we see the right reaction around its support levels. Now, IWM, this one was also on my personal radar. I am trying to nail a bottom over here, and at the 5% project, I have been sending you guys many trading ideas on IWM, but none of them are getting triggered because it is losing momentum. All right, so it is just dropping, which is very good because we can buy at a cheaper price, and in this scenario the risk reward ratio will be even better. So okay, we are in a very comfortable situation right now, but we do not see any meaningful buy signal yet. All right, we lost the $220 over here. Okay, we closed this previous open gap. Right now, if you ask me, we are heading towards the 215. All right, the next technical support level. If we see any bullish reaction near this area, fantastic, but right now there is none. Sofi is also dropping, collapsing, trying to retest its next support level. Now, This one is quite interesting because if we see any reaction near this bottom level over here, that could be a very good opportunity to buy, okay? Because SoFi is still very bullish. However, what if we lose this support level? In this case, SoFi is going to trigger, for the first time in many months, a crystal clear bearish pivot point. All right, many months. I'm so sorry. We did a bearish pivot point over here in December, January, right? But it was totally frustrated by a following bullish momentum over here. So, okay, still, by triggering this bearish pivot point, we could officially reverse the medium-term bias, suggesting a sharper correction on the weekly chart, maybe back to the $13, or maybe to even lower levels. If we use Fibonacci, we have many other support levels to work with. Of course, the 50% around $12, the 61.8 around $10 down here. So we have many support levels that could prevent SoFi's price from a further drop. But so far, the most important inflection point is $14.42. All right, that's the key point that could trigger a bearish pivot point. It is not as important as your like, because if you're still watching this video, consider clicking the like button if you enjoy the content, if you like the way we analyze our stocks over here, our charts over here, and remember to subscribe, because there is no way you are still watching this video for more than 25 minutes and you didn't like the content. All right, so this channel is for you. We are here every single day talking about many stocks, talking about technical analysis, statistics, strategies, practical strategies to use. All right, so we are here every single day trying to deliver to you the best analysis I can offer. All right, so just consider subscribing, which reminds me, guys, thank you. I mean, 16,000 subscribers. When I started this channel a few years ago to practice my English, right, posting videos here on YouTube, I couldn't possibly imagine that I would have 16,000 subscribers here with me. So I highly appreciate your support. Thank you very much. I'm glad you guys like the content of this channel. Thank you very much. I always work a lot and do my best to honor your trust, your audience. All right, so thank you very much, and I see you guys next week as usual. Have a nice weekend, stay safe, bye bye.